here bringing you a 15-minute video on Seafarer's Tax as it stands in Ireland in 2017. So if any of you missed the live talks, this is the abbreviated version, and if you have any questions, feel free to email me at kevin@kevinbarry.ie. Okay? So this is what we're going to be doing for the next 15 minutes. I'll just very 5-seconder say who we are and what we do. I'll nail in the 8 items every seafarer should be keeping. I'll clarify the difference between a resident and a non-resident seafarer. Quite quick, and you should fit into one of those brackets. I'll zone in on the main differences. There's quite a number of differences between the UK and Ireland, but certainly the main ones. Issues if you're married versus single, what to include and not include on the tax returns. Mortgage issues, that's a new one I've added in, simply because a lot of seafarers find themselves, because of their earnings, able to come up with the 10% deposit here in Ireland to purchase a house if they can find a house. But how will the banks treat them? And I show you the way around that, and some traps to avoid. Okay, so the last thing is there's a few extra safeguards I want you to think about, which I wouldn't have had a couple of years ago, but I've noted them now. Okay, very quickly, if you want to see who we are, go on to barryaccountants.ie or irishseafarerstax.ie and click about us, and my background is there. Same way my blog is Growth Accountants. LinkedIn, you'll see my CV. Our social media page is on facebook.com/allthatcash. And Businesses at Work and Paxkey are 2 websites that I don't use at the moment. They were to do with little inventions we were doing, but we haven't really pushed on with them. Haven't had a minute, so if you come across those, don't worry about them. Okay, these are the key items to keep as records. Okay, the 8 records every seafarer must keep, and you have all these. Okay, there's nothing new here. The discharge book. This is when you get off or on a vessel or a oil rig at a foreign port. The captain stamps your book as disembarking or embarking. It just shows that whether you were at sea or not at sea. It also reinforces if you were not in Ireland where you were. Okay, and scanned copies of those will do any accountant. Your passport. Again, if you're going into a non-EU country, this will be stamped. It'll reinforce that you're not in Ireland, and these are relevant to your tax position ahead. Pay slips. Again, if you're working for a foreign organisation, being paid from a foreign pay point and doing your services abroad, the pay slips will evidence that. Contracts of work. This is key as to whether you're an employee or an independent subcontractor. The tax treatment of you is completely different for both. Just a quick, I'll zoom in on one quick item. The Irish Seafarer's Allowance gives you an extra 8,500 nearly tax-free. That only applies to employees, okay, not to self-employed. A diary, again, there's nothing in tax law that says keep a diary, but even if it's, and we'll be coming out with them later this year, even if it's an app on your phone that keeps track of your shifts on and on in your rotations. If the discharge book shows you getting off a ship in Rotterdam but you didn't come home for a week, you just need to keep track of the fact that you weren't home for a week. The extra days may count for something. And receipts, if you're buying items to do with improving your business, and whether it's specialised equipment, clothing, courses, travel costs, keep the receipts. They may or may not be tax deductible. Medical expenses. A foreign address, very useful to reinforce the fact you're outside the country. If you pay to a foreign pay point, your employer would say where your wages are coming from, and the foreign employer details. Okay? Now, an extra one that I'm coming back to people with is, if you're working offshore and you're non-resident here, it's more preferable you pay it into a foreign bank account. Now, Barclays and Lloyds Bank have facilities to set up internet-friendly foreign bank accounts, so at least if you're paid in there and then you transfer money into Ireland, it's not confusing the situation whereby you have foreign money coming into an Irish bank account and you're getting queried on it. It also might weaken your non-residency issue if you've a whole life going on here, even though you're only home 120 to 130 days a year. They might say, and they make the rules, they might say you're a non-resident but you're not really, and try and tax you, okay? Another one is filed separately. If you're married, let your wife do her thing, you do your thing, or if your husband do his thing, and you do your thing, okay? So every non-resident, married or married, goes down as single. Their tax affairs are completely separate. They can still tick off that you're married, but you're separate treatment on taxes. Another one is if you're on holiday and you even go looking at a ship or a boat, or you do an interview abroad and make a bit of a holiday out of it, keep the receipts. Some of them or all of them will be claimable as business expenses and will keep down your tax bill if you have a tax bill. The days abroad are also included as non-resident days. So if you don't have to be at sea working to be non-resident. Sorry, just go back to that one. You don't have to be at sea to be non-resident. You could be on holiday in Lanzarote, you're still out of the country, all those days count, say, as do foreign weddings and that type of thing. Bad weather days. If you're caught in Ireland longer than you expect because the ash cloud is back, or you couldn't fly out due to stormy weather, or your plane was forced to turn around and come back because there was something wrong at the destination, well then those days which are outside your control are not included as days in Ireland, okay? But you need to keep track of them, hence the diary, because you forget, you say, well, they're there for 2 days or what. And that's the important thing there with the records. Okay, the non-resident seafarer versus resident. Okay, what does this mean tax-wise? Well, a non-resident seafarer is someone who doesn't live in Ireland, they work abroad from a foreign, are paid from a foreign pay point and do the services with a foreign organisation, okay? They don't pay tax here. They may pay voluntary PRSI. To reinforce what I just said there, they meet the two rules of non-residency. They're in Ireland less than 183 days, but more importantly, they're over a 2-year period, which is the year you're in plus the year before. You're abroad a minimum of 225 days, okay? But it's 450 days, which is double that, over 2 years. So, for example, in 2017, to be non-resident, you need to be 450 days out between 2017 and 2016. Divide that in two, that's an average of 225 a year, okay? It's just a 2-year rule. You can't go back more than 3 years. So, in simple terms, it's 140 days or less per year on average. So what makes that happen is obviously to be here less than 140 days or to be out more than 225, okay? But all days count. Holidays, weddings, funerals, all those days out count, okay? But there'll be no tax on your Irish income, and that's the difference. So if you don't meet those rules, you're a resident seafarer. You might be working abroad, but you're not abroad enough, okay? So just to have a comparison there for you, the difference between the two is the resident seafarer would pay tax in Ireland. They might be able to claim the extra tax-free amount of a Seafarer Allowance. That's a drop-down Seafarer Allowance, which is where you're 161 days at sea, and they would have an Irish address. The non-resident seafarer, even though they're an Irish person perhaps, or even an English person or a New Zealand person working in Ireland, they're non-resident because they're 140 days or less in Ireland on average. They have a foreign address, a foreign bank account. They work outside of Ireland for a foreign organisation, okay? So they don't pay any tax here. What is the Seafarer Allowance, you might say? I hear about it, I don't know really what you're on about. To qualify, first you have to be a resident seafarer in Ireland. You work on an EU registered vessel, which goes to a foreign port or platform, okay? So it's not just sitting out there. Now in Ireland, this is one of the differences, going to an oil rig, which is stationary, or a drill ship, which is stationary, which is in motion. Stationary in motion, but a drill ship that is drilling, that's like going to a foreign port as far as Ireland is concerned. That's not the way in England. Okay, so it also has to be carrying passengers or cargo, but the key thing is you have to be 161 days at sea. Okay, if you're less than that, you don't get the extra tax credit. Now, an extra 8,500 will save you 2,500 in tax. I just threw this one in, the fisherman's tax credit. Just shore-based fishermen who go out for a couple of days, come back. Before they got nothing, now they get an extra 8,000 a year tax-free. That only just came in 2017. Okay, but if you claim the fisherman's tax credit, which never used to be there, you can't claim the Seafarer Allowance. So it's worth 2,540 off your tax bill. You have to be on that EU registered ship. that goes to a foreign port or platform every 90 days, I think it is, carrying passengers or cargo at sea for that amount of days, and if you claim that, you can't claim the fisherman's tax credit. So it's one or the other. But which are you? Are you a seafarer working on oil rigs, or are you a fisherman? So you won't be going for the two. That's it. Any other tax deductible expenses, the type of things would be medical expenses, dental expenses. If they're over €250 a year, you get it back. You get back the tax on it. Major differences between Ireland and the UK. Okay. In Ireland, if you pull into a port and you stay there, you're still at sea. That port could be an airport or a seaport. Okay. So there's one. You pull in there in Dublin, there's no problem as long as you stay on the ship or within the confines of the port. Okay. The midnight rule. This is where in Britain, if you leave Britain by midnight and go at least 12 miles offshore, you're taken never to have been there. But here, if you're in Ireland at any stage, you're here. So I'll give you an example. You're in the north of Ireland, let's just say you're in Enniskillen, and you drive into Bundoran to buy some petrol, or Ballyshannon, just over the border. Then you drive back into the north again. Your credit card or debit card would evidence that you were here. So because you came in for that 20 minutes to fill up with petrol or diesel, you're here all day, so you've wasted a day, okay? So that's a major one, the midnight rule. UK waters, they've got this 12 nautical mile limit. The foreign port for us could be an oil rig. For the English and Scottish and Welsh, no. The 183-day rule is a big rule over there. If you're in less than 183 days in Britain, you're not there. Here that doesn't mean a thing. It's important to be 140 days or less on average, okay? If you are working in Britain and paying national insurance, you can get a foreign workers medical card, which will half the USC you pay in Ireland if you're resident in Ireland, okay? That's a big one. So if you don't have that medical card, get it. So I go back here. If you pay UK national insurance, then you don't pay PRSI here, and you get an extra tax credit to compensate you for the extra cost you pay in the UK for that national insurance. There's new UK residency rules out, and it's all got to do with ties with the country. So even if they're not in the UK at all, the UK man can chase after them and say, well, you've a house here, you've kids in school here, we think you're resident here, we're going to tax you. That's not the situation in Ireland yet. Split year rule. If you're living in Ireland full time and you get an employee type assignment abroad and you just leave and you stay gone, well, from the moment you leave, you don't pay tax here. The look back, the 450 days out over 2 years doesn't apply, but you must be non-resident the next year. I'll give you an example. It's 2017, and on the 1st of June I decided to go to America to work on an oil rig and live in Tampa. I've been here all the time, so looking back, I'm definitely resident up until now. Because I'm taking an employee type job, from now forward my American earnings won't be taxed here, but I must be non-resident in 2018 to reinforce that. Okay, so that employs to drop down just employees. A couple of examples, and these are real life examples. Okay, this is where Jane from Dublin, that's not her real name by the way, she used to be working with SeaLink on that salary a year, 50 grand. So she was 226 out in 2015, and she moved to the Cayman Islands, lovely place south of Jamaica. Very expensive, but go there if you get the chance. Okay, so she went in 2016. That's it, she's gone for good. Now, another rule that's there is if she's less than 30 days in Ireland in a particular year, there's no look back rule. So in 2015, she was 226 days out. And because that's no good to her, because in 2014 she wasn't. But if she leaves, and to reinforce that she's left in 16, that she's less than 30 days in Ireland in the 2016 year, but then the look back rule doesn't apply, and she would save the tax on that money, which is 14,177. And there's no tax in Ireland either from the day she left. So she left, remember the split year thing, gone, and really evidence that she's left, she's non-resident in the 2016 year. Okay. Now just one thing, if you leave like that and you're gone, you're still meant to, a lot of people forget to, you're still meant to file an Irish income tax return for the first 3 years after you leave, just so you tell the Irish authorities what you're up to, even though you're not here. Most people don't know that, most people forget. I've never seen it come back on people, but the rule is there, so you're told now. Just keep your day job abroad, that no one's sending you a letter to say you owe us tax here in Ireland. But even if you rent out stuff here, or you have dividends coming in, or mortgage interest, if you're non-resident, the first 3810 of investment income is tax-free here in Ireland, okay? But if you've more than that, it's all taxable at 20%. So I'll show you the resident seafarer guy. This was another real man, working with good old BP, taking the oil out of the ground or out of the ocean bed, month on, month off, earning 45 grand, early enough in his career at the time. So he was over the 6 months out of the country, just about, but he was less than that 225 year average, okay? So he did qualify for the Seafarer Allowance, which brought down his tax bill, but he still paid tax here at the average rate of 26%. That's when I allowed for all the tax credits, okay? So he's coming and going, he's here half the time, he's gone half the time, but he's still caught, okay? And I just use this one again. Let's just say Jane came back. She was the girl on the 50 grand. I just put this one in as the type of thing that could happen. So let's just say in this case she was most of the year out of Ireland in 2015. But in 16 it didn't work out for her in the Cayman Islands, and she only stayed the 6 months and came back. Okay? Now, would that make her taxable? Well, see, the thing is, between those 2 years combined, she was more than 450 days out, and she met the two rules. She was more than 183 days out, and she was more than 450 days out over 2 years. So even though in 16 she was just the 6 months out of the country, she met the 2 year rule, which effectively meant she doesn't have to pay tax on her 2016 income, unless she earned it in Ireland. Okay, but on the foreign income, no. And here's another good one. This is Mary from Mayo, self-employed engineer earning huge money in Ireland, month on, month off, a resident seafarer. Look at her tax bill there, it was 67,000. We moved her to a company, so the company's like having a new person born. So all that money came in to the company, and she paid herself a small salary out of it, about 40,000, okay? But her overall tax bill, her tax bill used to be on 150, then it dropped to, she would pay herself 50, and she'd still 100 grand in the bank. But her tax bill overall between the two came down by 43,600. That only works if you're spending less than what you're making, okay? Because it's all got to do with the highest taxes on you personally. So if the money goes into the company and you take it all to yourself, you're paying full income tax on that. So it only works if you leave money behind at the company. Mortgage issues, I have a separate webinar on this if you look at my upcoming webinars link. But effectively, if you're a seafarer, you don't live in Ireland and you want to buy a place here, this is what you need. You need 3 years proof of income. You need tax clearance, which is a letter from the likes of me saying you filed your tax returns and this is the situation. Bank statements for the past 6 months. You need your 10% deposit. It used to be 20%, but now it's down to 10. The 20% applied to second time buyers. The term would be a minimum of 15 years, but it'll go as far as 20. You need life assurance on that mortgage. And you must, key thing, be buying for your home. So the important thing is you must be buying for your home, okay? They don't want to hear about buy to let, they've been so burned, okay? The house must be a finished house and not something you're going to build or renovate, okay? So that's the situation there, okay? One of the last things on this video is a couple of things, married versus single. The non-resident seafarer, someone who works abroad, gets paid for abroad and no services are performed in Ireland. And this is why we go for the separate filing. If your wife or husband are here and they're bringing up the kids, they'll need to be paying PRSI here. That'll qualify them for the old age pension. They file their own tax return separate to yours. But if the non-resident seafarer becomes a resident seafarer, that can become a joint tax return. Now it is possible, as long as you're not gone over 12 months, that you can make the minimum contribution to the Irish PRSI here, which is €500, drop down 500, as long as you don't miss 12 full months. So you as soon as you leave, you pay the 500 quid every year, but there's a special for that, and we do that for you. But traps to avoid if you're non-resident, okay? Because many of you may be considering being non-resident for a few years for career reasons, to move abroad, to save up some money. Try not to forget that filing for the 3 years you're gone. It tells people here where your money's come from when you come back, if you come back. Don't get the days wrong, okay? Keep track of the day you leave. Doesn't count as being non-resident. So if you leave at 6 o'clock in the morning, you're here all day. If you arrive back into Ireland at 11 o'clock at night, you're here all day, okay? So always exclude the day coming and going. And if you're coming and going a lot, those days, 2, 4, 6, 8, add up pretty quick when you want to be in Ireland less than 140 days. So if you come home for a weekend, you arrive on a Friday night at 11 o'clock, you're here all day, that's Friday gone. And you leave early on Monday morning, that's Monday gone. So there's 2 days either side. So you're home for 4 days when really you're only home for 2. That can add up. Pension planning. Now, if you're not paying tax in Ireland, you don't need to invest in a pension to save tax, but you may need to save money. It is the same thing, alright? But Irish companies can't take out pensions for non-residents. I don't know why, but you don't need them. The saving scheme is the same thing. Bad weather days, keep track of them, get that diary out. Illness insurance, I like this for people. You're more likely to get sick after the age of 35 than die. Serious illness cover if you're out of action due to something happens to you for a couple of years. At least there's a lump sum there to clear your bills until you get back on your feet, okay? Now I watch out for this. If you're less than 12 months departed, we apply for this voluntary contribution of €500. I mentioned it already. But if you've gone over 12 months, they won't let you in. It just keeps your Irish pension entitlement up, and for what it's worth, the free healthcare that we avail of here, once you get through A&E, is there for you as well. Double taxation. Yeah, if you pay tax abroad and don't get it back, well, it gets knocked off your tax bill here. Just keep track of that one. Happens a lot with Nigeria. If you're working in the UK and get the national insurance, or even some foreign places, you get the non-resident Seafarer medical card. That'll cut your tax bill in Ireland if you have one. And even if you don't have one, it's great to have the medical card, okay? 12 nautical miles is 13.6 actual miles. So especially around the UK waters, that midnight rule, if you've gone by midnight, they want to be out past that so that they're actually left the area. So it's just going to be relevant, just so you know. I'll be notifying people about offshore bank accounts. These are all legitimate. You declare that you have them. But if you're non-resident, to reinforce that, you're getting paid into a non-resident account. There's no harm in it. There's a couple of links. There's one with Lloyd's International and another one here with Barclays. Okay, if you just Google them, but we'll send you a few better ones. A letter from the sea captain or from your boss saying they confirm that due to bad weather a number of people weren't able to attend a certain place. It's great to have it. Get it when it happens. Don't get it 3 years later when everyone's moved jobs and they can't remember, okay? Force majeure, that's a force majeure. It's a proof. A location proof. These are an app, kind of like marinetraffic.com, that keeps track of where the boats were. And another one is your Irish bank account. If you have an Irish bank account here but you're non-resident, put your foreign address on it. Number one, you don't pay dirt tax in Ireland on the interest, and number two, it reinforces the fact that you're non-resident, because these things will be thrown at you to say you are a resident really, okay? A huge one on Dropbox, keeping files and documents in case you lose them. Scan them or photograph them on your smartphone, everyone has them, and put them into Google Drive, which is free, or Dropbox, which I think is virtually free, and your files are up in the cloud and we can download them, or you can download them when you want them, okay? Typical fees for us, these include VAT. The first year is $840, but there's early payment discounts which reduce that substantially, and every year after that is $615. If it's a company, $615 sets it up, and you want to be allowing about £1,000 a year of administration fees, because it's like having a new person beside you. So that's it. Log on to irseafarerstax.ie, you'll get through to us. We like to plan your residency recipe, whether you're resident, non-resident, and just so you can rework your days to avail the Seafarers tax break that's there. Keep the records, keep educating yourself, and go onto that link, the little questionnaire for you there, and tell us about your background, and we give you a non-obligation opinion as to what your options are. That's it. Thanks for hanging in there. Bye for now.